Well, let's dive into some of the secrets Australia's top investors use to build wealth faster. And Sydney property expert Ravi Sharma joins me now in the studio. Great to have you on Ausbiz, Ravi. So you built a $15 million property portfolio. Tell us, how did you get started?
I started like everyone else, which is, you hustle hard for the first deposit. So I think the day after my year 12 formal, I went straight into full-time work. And while I was doing full-time uni, I was doing full-time work and just saving everything I could. Fortunately, I was in a good position where I was staying at home with parents, so I didn't have to pay rent. So very fortunate. And that helped me build up the deposit for that first investment property, I suppose.
And in this day and age, it might be more challenging for some people to do that. So what would your advice be to those who are starting out in 2025?
Yeah, it's so different now compared to back then. I started about 11 years ago, so property prices were a lot lower than they are today. And bank, have lending restrictions now put on applicants that weren't really there, say, 11 years ago, or they weren't as strict. So I guess the advice is still the same as it was 10 years ago, as it was 50 years ago, which is try and hustle hard. If you can make a little bit more extra income on the side, try and do it, because we want to get onto the property ladder. And as we know in Australia, everyone's infatuated with property. So it's a good place to park your money, I suppose, for many.
And you bought your first home in regional Australia. Those prices out there, they're still lower than the cities, but are they still affordable to start out?
Yeah, definitely. I think when I purchased my first investment property, it was about $190,000 for a 3-bedroom house. That same property now is probably fetching anywhere between 450 and 500K. So prices have moved up, but in saying that, they're still significantly lower than major capital cities like Sydney, where for the same sort of price point that you can get a house in a really good location with some land, you would pretty much be getting maybe an apartment in Sydney or in Melbourne.
Now, I see you've got a podcast and you had a recent episode saying with KPMG predicting a major property boom in 2025. So what would be your advice on how to play this?
Well, I think it's very similar to any sort of media headlines or any reports that do come out. It's that everyone's strategy is very different. And when you see some of these headlines, some of these reports, they look at these markets in a very generic form. So they'll say Melbourne will grow, but that doesn't mean every suburb in Melbourne grows. So my advice to people is stick to your strategy, figure out what your goals actually are. And it's never a bad time to buy property, but you've got to buy well. So you could be in the biggest boom ever and purchase the wrong asset, or you could have a market that's flat, but it serves the purpose of you living in that area because you need the shelter and for longer term growth as well.
Last week, we saw the RBA come through with their first rate cut in 4 years. So how will this benefit those who are looking at purchasing property?
I think the rate cut itself doesn't make a significant difference. Like, interest rates have gone up by 400% and going down by 0.25%. It doesn't really make a huge difference for many. But in saying that, I think it does definitely affect people's level of confidence. Knowing that we may not be seeing further rate hikes in this cycle means that people can start budgeting a lot more consistently, knowing a bit more certainty around what the mortgage repayments will look like in the next 6 months. And I think it could be the beginning of the rate cutting cycle, although it may not go as deep or as long as people think they will.
And what type of property do you advise people to get started with? How about commercial property, or do you just advise them to stick to residential?
Yeah, really good question. For me, I think the residential stuff is where you want to build your foundation. People need shelter and you want to provide homes, good quality homes to people that want to rent those homes. And with commercial, what you traditionally see is a larger, deposit required as well as a higher price point. So if you are getting started, you want to get into the market. You don't want to just buy anything because it's cheap. You want to buy affordable, but you want to buy in the right areas where the supply and demand makes sense. So my advice to people is still start with residential, start with existing properties. So with certainty is there demand from a rental capacity as well as, long-term capital growth. And then from there, you can continue building out that property portfolio and maybe find yourself in commercial as well.
Are there any particular regions in the country that are sticking out to you at the moment?
Well, we were pretty early to the Perth boom, and before that it was the Adelaide and South Australia boom. And I think a lot of attention is there for Queensland and the Queensland markets, which is where we've purchased a lot of property over the last 18 months. But there is speculation around Victoria and the potential recovery at some point. But I would say you've got to be very careful with how you pick those suburbs because, again, there's markets within markets and there's streets within those markets. So we need to be very careful with what we're actually purchasing.
And you have a new book that is coming out tomorrow. So does this give investors access to information that isn't already out there?
Yeah, I think the difference between, say, the YouTube content or the stuff that's already out there is that it's very sporadic. So even for myself, when I put out content, it's what's trending at the time, what people are looking for. Whereas this book is more of a handbook to go, how do I start from scratch and say, build up my portfolio with the mindset, the strategy, and the goals. And I think the biggest issue we have right now is young people are often looking at social media and we get influenced by other people's goals and what they're doing. Whereas this book should become that one-stop shop to go, it is okay if I want different things to you and different things to Ravi, and it just brings it all together.
And I can see you're host of Australia's #1 real estate YouTube channel. So what are your viewers most interested in, like the questions that they want answered?
Well, they love property, that's for sure. But in terms of questions that they ask is, usually is it a good time to buy? And if they are, they're looking at how they have the tools or the skills or at least some insights as to what the filthy rich are doing, buying multiple properties and how they could replicate it for their own portfolios. So that's pretty much where the content ideas come from. It's from the audience because that's what they're asking.
What would you say to young people who might think that it's just not practical to even own property, in 2025?
Yeah, look, if you were reading headlines in 1995 and you'd see the exact same thing, that housing is unaffordable, you can never get in. And we can all agree that if you purchased back then, the prices were so much lower. And so my advice to people is that you've got to, again, get really strict with your budget, understand what your goal looks like, and then look at this investing journey purely logically, which is really hard for us humans because we always look at things emotionally, but we've got to treat it like any investment or any business investment, which is I've got to look at the numbers that I put in and am I getting the return I want? And that's it.
Now, you say that you've invested in diverse assets, including collectibles like Pokemon and Dragon Ball supercards. What excites you about property so much?
I think for me, I would never have gotten into collectibles or crypto or stocks or anything like that if it wasn't for the foundation that I've built in property. So for me, my interests lie in those things and the returns are great, but there's too much speculation with those sort of things. And that's why it makes up such a small portion of my entire net worth and my portfolio. And for me, with real estate, you've got the power of leverage, knowing how the system works here with, banks allowing you to use the equity from one property to purchase multiple properties is the reason why I've stuck to real estate and I continue to buy.
And who do you see your book targeting, the audience that you went for?
Ideally, it's people that are in their 20s, 30s, and 40s. And I know it's a wide range there, but I think there's universal concepts that are spoken about in this book that affect all those generations. And it's largely for people that are thinking they've got one property, how do I get to 6? But it's also looking at people that are just wanting to get started with the right frame of mind. It's not just about how many properties you have, it's why do I have this property and is it going to serve my bigger purpose or my North Star?
And what are some of the themes that come through in the book?
Yeah, I think the biggest one is around goal setting and living in your own lane. Filthy Rich, by the title, people think it's just how do I make as much money? But in reality, it's about how do I have a balanced lifestyle where I'm ticking off all of those boxes around, my relationships? Are they fruitful? Am I doing something I love day in, day out versus I just want to retire, I want to sit on the beach and do nothing? It's about trying to find what your side hustle can be to then ultimately become your main hustle. But in the meantime, continue investing on the side because that'll give you the confidence to go and make moves or take risks like leaving your full-time job.
And for those who want to build an extensive property portfolio, how important is it to use, your stepping stones from one property to then help you get the next?
Yeah, I think you can't do it without having the equity from the first property to help you build out the portfolio because it takes a long time to save for a deposit. So if you've got almost employees, which is pretty much your properties in your portfolio, if they can continue doing some of the legwork by growing in value, and that's why it's so important you buy the first few really, really well. If you do that part well, then you're ultimately saving your cash from your income as a savings. But then on top of that, you've got the equity from those properties helping you. So in your first year, it might take you 5 years to save for your first investment, but it could take you the next 5, and you could purchase that in the next couple of years, because that's the power of compounding leverage.
And you mentioned that there are some tricks that Monopoly could teach you when it comes to the property market. What are those?
Well, I think the biggest one is, pass go and earn $200. But we've never known anyone to win that game by simply going around and never investing or buying up assets. And I think that's a really good way to look at life as well, that we need to continue using our money to go and acquire assets, because at the end of the day, who owns the assets are the ones that are going to live that fruitful life, and you get ultimately what you want in terms of achieving your goals. You can't get that by just simply going around in a circle and earning an income and just hoping that you can save yourself towards retirement. It just doesn't happen.
Well, Ravi, thank you so much for your insights. Great to have you on Ausbiz.
Thanks for having me on.